Rakesh Sharma, ED at Bajaj Auto, joining us now on NDTV Profit. Mr. Sharma, always a pleasure to speak with you, and thank you so much for joining us. Looks like a robust quarter, better than most estimates. I suppose the one fly in the ointment would be domestic sales and how they've been progressing, but you do see a turnaround there.
Yeah, indeed. Certainly, the area of the 125cc plus segment, which is the top half of the industry, is a key area of focus for us. And there has been some erosion of market share over there. But to put it in perspective, this segment really started surging post COVID, and at that time, 3-4 years ago, we were at 19-20% market share based on registrations, and that sort of grew to 25 and a half in FY24, and in FY25 we are down by about 1.5% as per our estimates. But we rather take this very strongly and react fast, because our ambition, of course, is to be at the leadership position in this segment. We are about 5-6 percentage points behind the number one. We are at a steady number two, considerably ahead of number three, number four. So we prefer to overreact. We have put in certain countermeasures in terms of expanding our portfolio to cover all the sub-segments in the 125cc plus segment. And we have seen some early signs, too early, but we are seeing some positive signs in April. And hopefully, during the course of the year, we should be able to wrest back the market share and grow faster therefore than what the industry is going to grow.
May I ask you to elaborate, sir, on some of those strategies that you've mentioned and you're seeing green shoots in April itself?
Like I said, we have introduced new variants to cover more subsegments. We have introduced 6 variants so that all kinds of customer cohorts have a choice which is apt for them. And these range from very simple commuter variants in the 125cc to a very high performance upgrade in the Pulsar NS 400. So with the expansion of the portfolio, I think we've got a man-to-man marking, and we would be having for each competitor, and there are 3-4 competitors we compete with because we are straddling the whole segment. We would be having a model facing off with competitor models.
Right. Rakesh, good morning. Hiral on this side. With the 125cc coming in, would it be right to say that that will probably ease out the profitability pressures as well from higher share of, what came in on the back of higher share of two-wheelers, that's the entry-level ones, and the EVs? And secondly, the average selling price to an extent will improve further as well in terms of FY26.
Well, the profitability, as you know, has held rock steady at 20% plus over last 6 quarters, despite the ups and downs in the environment and the rise of the electric vehicles business, which was in FY24 10% of our domestic revenues, which is now doubled to 20% of our domestic revenue. So there has been a lot of dynamic management. It's been very helpful during the last financial year to have a slightly softer rupee, because it improves the realization and that drops down to our margins. Going forward, we will continue with the same approach of dynamically managing and trying to optimize growth, bottom line, and market share. Having said that, we will see some support from exports to KTM returning, because they were always at much superior margins. Overall exports continuing to clock 15% plus growth, and perhaps a steady cost environment. But the headwinds really are going to be, the hardening rupee. Already that towards the close of the last quarter, the rupee appreciated, and that would be a strong headwind for us to manage.
Right.
So we'll have to manage both these, the support and the headwind, and see how. But the aim, of course, is to always
So,
deliver a best class
so
margin.
Rakesh, interesting point that you made about KTM as well. Yes, the anticipation is it will start delivering in the second quarter of FY26, and that's what you've mentioned on the conference call as well. But taking KTM into its exit with regards to bankruptcy, how long will it take for the company to get back on track, and how substantial or how confident is the company to deliver on that front so that it supports this recovery that you've seen in the export business?
So the exports to KTM have already commenced in quarter one. Recommenced in April. There was a gap when they became zero because of the severe liquidity issue. There have been two sets of actions. One is to solve for immediately is the liquidity issue at KTM and the paying off of the paid down debt. You know that there was a court supervised process where the creditors had accepted a 70% cut, and that 30% had to be committed by 23rd of May. And that has been done. The second set of actions is our intention to take majority control in KTM. That is subject to regulatory clearances, both in India and overseas, which may take a couple of months. We obviously believe that this is a very sound opportunity for us. We have been partners with KTM since, though at a minority level, since 2007. We have produced over 1 million bikes for them, which have been sold in 80 countries. We have an inside view on the deep franchise and the differentiated franchise which the KTM brand enjoys all across the world. And of course, there has been a convergence of unfortunate factors, the demand falling off, the e-bike business loss, the misreading of the volatility in demand and the expansion of stocks and working capital. But the customer franchise remains quite vibrant. So we are very optimistic that it is a great opportunity. As soon as the regulatory clearances are through, we will put our shoulder to the wheel along with KTM and see, how it can be brought back on track, ready to race as soon as possible.
Just want to understand, Mr. Sharma, just on the EV strategy, and I know you referred to it briefly, but I want to get a little bit more into it. Is that the next growth driver you're seeing? Because the trajectory is there, but the margins perhaps are not.
Well, it's a process, Tamanna. So we've always been saying, even in the days when people were saying that, oh my God, now EVs are going to replace ICE. We on the ground, we never felt that EVs will replace ICE. I think companies like ours, which have a global business spread in 100 countries, and even in India, which is our major market, we will see the coexistence of different formats because these address different use cases, and the customers' needs are very, very diverse. So we feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by quarter four of FY25, our EV business, which comprises both three-wheeler, e-auto, and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course, it is less than the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business. We were not in scooters. So this is a new segment which has become available to us in India and subsequently overseas. Similarly, in three-wheelers, the EVs are going, e-autos are going to areas where ICE autos were largely restricted and we couldn't do business. So
That's fine, sir. I'm not alluding to any cannibalization within segmentation. I'm just trying to understand if one of the largest companies is ready to make a pivot, and if it's making sense right now to EVs in terms of a revenue share. Where do you see this going down the line?
but that's exactly what I said. There is no need to make a pivot.
Okay,
This is not a 0-1 situation.
it's an
We
add-on.
feel that ICE and EVs will coexist and we want to flourish in both. With EVs, there is no dilemma for us that, oh my God, we are replacing a high margin ICE with a low margin EV because it is a new business for us. Yes, when you put the percentages together, it is lower percentage.
So,
But
so
it is
Rakesh,
bringing us
Rakesh, I
new
think,
EBITDA.
Rakesh, the question comes in over here is you. I mean, one of the peers who's come out and said for them to see a EBITDA break even, they will need to sell 25,000 units a month. If I have to look at a Bajaj Auto, for the margins to become an absolute lever for the business, to see what, the other part of the business is doing, how many units of EV will Bajaj Auto need to sell to get that kind of a number out?
Well, I'm not aware of this maths which you have just
No, this 25,000 is a
about.
competitor, I'm saying, not
Yeah,
for
so I
Bajaj
don't
Auto.
understand where that maths is coming from, but like I told you, that with our 3.5 series, which I think mentioned last time also, with our 3.5 series in two-wheelers, we are already positive, and like I just said, the entire portfolio which we have, which is 20% of our domestic revenues, is already positive. And on an absolute level, it is adding to the EBITDA pool. On a percentage basis at a corporate level, yes. But you see, that happens, that kind of maths is there everywhere. There are 108 countries. There are some countries which are highly profitable, and there are some countries which are negligibly profitable. And you have to manage size, growth, profitability and a competitive position. So these are not, 0-1 black and white decisions. EV is an important segment. It is there. There is opportunity to make money, and we'll go ahead and do that.
Absolutely, your point taken into consideration. My last question is with regards to KTM. Post the resolution, post the regulatory approvals, what's the plan with keeping Triumph and KTM business separate in Europe? How will that function? And two, who's going to head the KTM business? What's the strategy there? Is it going to be someone in-house, outside, someone with expertise in the European market? How are you looking at that aspect?
Well, these are very premature questions, but just to address one or two things so that there is clarity, there is no interrelationship between the way Triumph is working. Triumph is a strategic alliance. It's a non-equity partnership that is continuing. Triumph and KTM were coexisting even before this fracas which has happened with KTM. So that is continuing. In KTM also, we have, there is already a CEO over there, very, very efficient and very effective CEO who joined in September last year. And the CEO is building his management team, and they will continue to operate. Of course, once the regulatory approvals are through, we will work more closely with KTM to capture the synergies, primarily at the back end in manufacturing and R&D and procurement, and to some extent in the front end. And that work will begin in true earnest once those regulatory approvals are through.
One last question, Mr. Sharma. We've been speaking about FY25. We've been speaking about a longer-term outlook. You mentioned earlier in the interview that April is beginning to look good. Monsoons have hit early. Just want to get your sense of, what the feel is in terms of demand, and are you expecting this to boost?
Yeah, so what I said was that in terms of share, we are seeing improvement sequentially between Q4 and April, May, if I may also add that. But in terms of the industry, we are not seeing a big surge in the industry. Industry is in the I'm talking of the motorcycle industry in terms of the registrations. It is in the positive zone, but it is not. We are not seeing any kind of surge. So it's a steady equilibrium position in which our countermeasures are yielding signs of some early progress.
Excellent. Thank you so much, Mr. Sharma, for that detailed conversation with Bajaj Auto. Always a pleasure to understand
Thank
what's
you.
happening with the company.